We were mentioning how gold prices are continuing to shine today, and so far this year, for a myriad of reasons, investors have continued to show interest in bullion. It's up in the neighborhood of 30% this year, but stocks of companies with ties to the gold market have been equally impressive. Case in point, Wheaton Precious Metals, which has had much stronger performance than the price of gold itself, with its stock returns so far in 2025. The company just came out with quarterly results. Their gold production has been on the rise. Randy Smallwood is the CEO of Wheaton Precious Metals, and he joins us now. Randy, nice to have you back with us on BNN Bloomberg. I guess I'll just start with what it has been like for you guys in 2025. There's been so much discussion around gold, but on your side of the fence, what has 2025 been like?
Well, I like Grant White's comment in your last one there about the only constant is change. You just never know what you're going to wake up to the next morning. The surprise of tariffs on gold now, or on refined gold, and the challenges and the costs that are going to be associated with that. It definitely makes. I've always said gold is a comfort metal. And so it's in times of chaos, in times of rapid change and unpredictable change like this, gold is very attractive. But I tell you, with these tariffs on gold, it sure makes the equities look even that much more attractive in terms of a way to get exposure to gold. So pretty excited about where we're going.
Can you jump into that? Like, that's, I guess, the latest wrinkle is that I guess we have to sort of figure all of that out. Like, I mean, you're a CEO. You got to make the big decisions on a business, and we hear all sorts of different stuff. How much do you have to focus on custom sort of treating gold as sort of a tariff story?
I mean, it comes down to how do what kind of premiums are Americans paying? As discussed, we've already seen this in the copper space when tariffs were labeling copper, and then all of a sudden, as soon as the extra costs were coming into play, refined copper was passed by and allowed to move freely. And gold is a fungible asset that is respected all the way around the world. It's I won't be shy. Gold is money. It's and so to have that taxed as it's refined and moved to the United States. The United States does not have enough refining capacity within its country, and it won't have for many, many years in terms of delivering the demand for, or satisfying the demand for gold within the country itself. And and in fact, the bulk of gold is refined in Switzerland. And so, I wonder if this is a bit of an overflow impact from the discussions between the United States and Switzerland, and it's got a bunch of us scratching our head because we haven't seen this. Gold to date has been pretty immune from this. To me, I think it makes gold that much more expensive. Those Costco bars that are going off the shelves so fast in the United States are going to get a lot more expensive if these tariffs are applied.
Yeah, well, that's it, right. People have been taking a look at those gold bars at Costco, apparently. Okay, so when it comes to the nature of your business, maybe you can remind our audience, Wheaton would be sort of a different kind of business than, let's say, a Barrick. And also, it's not just a story about gold. There's the focus on other metals markets, including silver. Break down how you've been making decisions about how to operate the business this year.
Well, we're a streaming company. We created this business model about 21 years ago now, and we've had great success. The mining industry needs capital, and so what we do is we invest into top quality mines with top quality partners. We're very selective about what we invest into, and we supply capital to help these mines get built or help them expand. But for that investment, instead of just getting cash back with some type of interest rate or something like that, what we actually purchase is a share of the metal production. And we focus on the precious metals. So the bulk of our production actually comes from copper mines, but it's the gold byproduct and the silver byproduct that comes from those copper mines. And so we'll invest in billions of dollars to help these copper mines get built. And for that, we get 75% in the case of Smallwood, our biggest asset down in Brazil, 75% of whatever gold that mine produces for the life of that mine. Vale continues. The owner and operator, Vale, out of Brazil, continues to get all the copper production from there and another 25% of that gold. So the attraction from an investor's perspective is that we get access to good, high-quality production, including exploration success and expansion potential from these mines, but we don't have the cost exposure that a typical mining company has, like Newmont and Barrick and Agnico Eagle and such. our costs are fixed. We know what our capital costs is. That's our initial upfront investment to help get the mine built. And our operating costs are defined in the contract. As every ounce gets delivered to us, we pay somewhere between $400 to $500, depending on the contract, between $400 to $500 per ounce of gold, somewhere between $4 to $5 per ounce of silver as it gets delivered to us. So a very high margin business that has low cost risk, just about zero inflationary exposure. In fact, inflationary pressures generally benefit to us on the commodity price, but we don't see it on the cost side because our costs are defined. And so it's an incredibly attractive way of allowing investors, especially new investors, to come into the precious metal space. This is a very low risk way to get access to high quality mines, high quality operators, high quality production, high quality precious metals. And as you mentioned, we do gold, we do silver. We're about 35% silver, about 60% gold, and we've got a little bit of palladium, a little bit of platinum, and a little bit of cobalt. But our focus is precious metals, as the name implies.
Yeah.
And it's an incredibly low risk way of investing into precious metals, and it's as you can see, becoming more and more popular.
And let me just sort of have you put on your industry hat for a second, only because, this not only has the boom in gold helped Canadian stock market investors this year. Obviously, there's an interest in the production that's coming out of Canada. You said you're looking at opportunities always on the mine front around the world. I guess the simple thing would be like, well, if this gold boom is going to continue, like, why not be doing more production here, there, everywhere as an industry? What are some of the caveats to that, as somebody who's sort of aware of projects, what goes into projects? What's the big consideration there?
The challenges in terms of actually getting permits, getting mines built. It's getting more and more costly. It's getting more and more challenging. We're having to go farther afield to locate the ore bodies that ultimately we'd like to turn into mines. And just understanding, getting the permitting, getting permits in place to get these mines built. It's getting more and more challenging, which bodes well for the existing operations that we have around the world in terms of driving that price up. But it is so tough to build new mines, and especially for a company like us, where we do a lot of investing into the copper space. Copper mines are much more capital intensive. They just need a lot more money and a lot more time to get through the permitting process, through the construction process, et cetera, et cetera. And so, that challenge just makes it more and more costly to satisfy the increased demand that we're seeing. And we see that both in the gold space and in the copper space. So, it's one of the biggest hurdles to move forward, but it does create opportunities for us. It allows us, first off, to be selective, but there's always going to be opportunities for us to find ways to continue investing into the mining space for precious metals byproduct production.
All right, Randy, appreciate it. Always a helpful conversation. Everything from copper to Costco. There you go. We covered it all. Randy Smallwood joining us from Wheaton Precious Metals.